Those of you who are on, Assalamu alaikum wa rahmatullahi wa barakatuh, and to my fellow panelists, Assalamu alaikum to all of you guys. I hope everyone is doing great and is remaining safe during these interesting times that we live in today. My name is Salaudeen, and I'm the marketing manager here at ShariaPortfolio Canada, and I'll be your moderator for tonight's webinar. I want to say a special thanks to many of you who are from the East Coast. I know it's a bit late and you took time out to join us. So thank you very much. And of course, those on the West Coast, it's the perfect time for you, just pre-dinner or pre-salah. This is just to remind us all that what you see and hear tonight on this webinar is for informational purposes only. Our agenda for tonight is pretty simple. Of course, I'm going to be welcoming you, and I'm doing just that. So, Assalamu alaikum again. Then we'll discuss ShariaPortfolio Canada's vision and commitment to Canada, our clients, and our commitment also to Sharia compliance. This will be presented by our CEO, Naushad Virji. Then we'll switch to Sabinah Amershi, Vice President of ShariaPortfolio Canada, who will introduce our ever-growing Canadian team. Then we'll talk a bit about our funds and its ESG features. This will be presented by Brother Irfan Chaudhry, Chief Compliance Officer and Portfolio Manager at ShariaPortfolio Canada. And then the main course for tonight, of course, will be served by Nadeem. Nadeem, many of you know of him and might have been speaking to him, but he'll give us a review of 2020 and discuss the 2020 and of course projections for 2021. Of course, we'll have a lot of time for questions and answer. Feel free to use the Q&A tab to add your questions, and we'll get to them. Some of my colleagues are on live also, so they'll be able to answer your questions during the course of this webinar. But for sure, we'll get to them right after our presentation tonight. At this time, I would like to introduce ShariaPortfolio Canada's CEO, who will be speaking about the vision and the commitment we have for Canada. Naushad Virji has more than 20 years of experience in the wealth management space, and you will hear more about him during this webinar. But for now, let's welcome Brother Naushad to the mic.
Bismillahirrahmanirrahim. Assalamu alaikum. I'd like to begin by thanking all of you for joining us today. 2020 has been a challenging year given the COVID-19 pandemic. Many have been concerned about both their physical and financial well-being. We pray to Allah that this pandemic leaves us just as quickly as it came. Given current conditions and the challenges of today, I believe Sharia-compliant investing is a very relevant solution. We are uniquely focused on avoiding debt. In today's webinar, we're going to speak about how ShariaPortfolio Canada investment strategies did this year and what you can expect in 2021. Before we get to that, I'd like to run through some background information about our firm. I founded ShariaPortfolio in 2003. At that time, it was a service offering of Virji Investments. By 2014, we were overwhelmed with the demand for Sharia-compliant investing solutions. So we split off ShariaPortfolio into its own corporation. That was also the time that we raised quite a bit of capital for the company. And that allowed us to expand our team and expand into 26 states around the US. We had a lot of inquiries from Canadians. And in 2017, we began our journey of working with regulators in Canada to bring Sharia-compliant wealth management solutions to Canada. In 2019, we launched our fund company. We started with a real estate fund back in July and subsequently launched 2 exchange-traded funds on the New York Stock Exchange. We have a third one coming up in a few weeks. Brother Irfan will be telling us more about that later in this presentation. In 2020, earlier this year, we were very excited about launching ShariaPortfolio Canada. We were also very excited to win a couple of industry awards for our ETFs being best in class. So it's been a phenomenal year for us. In October, we even had the opportunity to ring the opening bell on the New York Stock Exchange. Just last month, we went global, and ShariaPortfolio now has a global wealth portal for clients all over the world. And we're already opening accounts for people in places like Dubai, East Africa, Pakistan, Sri Lanka, and throughout Europe. So 2020 has been a very exciting year, and we're very excited about 2021. Our company is part of a family of companies under the ShariaPortfolio banner. If you take a look at sp-wealth.com sometime, you'll see all of the different arms of our company. We have, of course, our Sharia-compliant wealth management business in the US. We have our Canadian wealth management business. We now have our global wealth management business, as well as our collection of SP funds. I'm really proud to be able to share with you tonight that ShariaPortfolio Canada and all of its affiliates collectively manage $250 million. ShariaPortfolio Canada is a Canadian corporation with offices in Toronto and Vancouver. We have an exceptional staff around the country that's ready to help you achieve your financial goals. For more information or to speak with any of the professionals on our team, visit ShariaPortfolio.ca and book a complimentary initial consultation with any of us. I'd like to give a special thank you to the clients that have already signed up with us in our first year. You are the ones that make this possible. Those that are new and here to learn more, we hope you'll find today's event interesting and helpful. It's really great having all of you here with us this evening. If you haven't already done so, grab some chai, sit back and relax, and enjoy the rest of this program. Assalamu alaikum.
Thank you. Thank you, Naushad. That was definitely amazing, and to see SP Canada's ShariaPortfolio Canada accomplishment in the last of course, ShariaPortfolio in the last 18 years, and of course, ShariaPortfolio Canada in just 1 year since we launched. At this time, I'd like to invite our Vice President of ShariaPortfolio Canada, Sister Sabinah Amershi, who will be introducing the Canadian leadership team. Sister Sabinah, again, the mic is all yours.
Thank you, Salaudeen. Assalamu alaikum, everyone. My name is Sabinah, and I'm the Vice President at ShariaPortfolio Canada. And I am involved in many different departments within our firm, but I mainly oversee the advisor team and our client service team. I've actually worked with Naushad since 2015, and I'm really excited to come on here and introduce myself, our team, and our amazing firm. We have a wonderful, hardworking team here at ShariaPortfolio Canada, who are located around different parts of Canada and also the USA as well. I'm really proud to work with our team of financial advisors and portfolio managers, and I just want to go ahead and introduce our team members to you all tonight. So we have, first of all, Irfan Chaudhry. He is our CCO and portfolio manager, and Irfan is based in Ontario. Irfan obtained his CFA designation in 2008, and he has worked with many large firms, and his experience and knowledge allows us to ensure that our firm holds the highest compliance standards. We also have Nadeem. He is our portfolio manager, and he is based in Ontario. Nadeem joined our firm in 2019, and his 20 years of experience in the financial industry ensures that our clients' portfolios allows our clients to be able to meet their financial goals while still following their religious beliefs. Nadeem graduated from Concordia University with a Bachelor of Commerce in Finance, and he also does hold his CFA designation. And you'll be hearing a lot more from Nadeem later on in the webinar. We also have Shamil Devji. He is the newest member of our team, and Shamil joined us earlier this year as a financial advisor. Shamil is our financial advisor in British Columbia, and he recently graduated from Simon Fraser University, and he has obtained his BBA with a concentration in finance. Shamil is also working towards his CFA designation, and he's gaining some very valuable experience with our firm whilst doing so. And as you know, in any firm, marketing is key. We use many different marketing platforms, as I'm sure a lot of you have seen. And Salaudeen is our marketing manager, and he is also, of course, moderating tonight's session. Salaudeen joined our firm earlier this year, and his extensive experience in the marketing world has made it possible to get the word out and let the world know that we are here. We recently partnered with a company called ML360, and they've been in charge of our social media platforms, and they've done an excellent job in spreading the word about our firm. We do also receive inquiries on a daily basis from financial advisors and other wealth management firms who want to ensure that their clients' portfolios are also Sharia compliant. So our firm actually offers institutional services so that we can partner with these firms and with these advisors throughout the world. Peter Barron is actually our institutional sales manager, and he's also based in Ontario, and he's in charge of this program. And Peter has over 15 years of experience in the institutional field, and he's also worked with several large firms as well. Next up, we have Fatema Alidina. She joined our firm initially in 2014, and she has great experience in client services and in marketing, and she actually rejoined our firm in 2019. And she is the executive assistant to our CEO, Naushad. Fatema graduated from the University of Santa Barbara in 2010 with a BAA in communication and sociology. Fatema brings many years of experience throughout several departments, and she has played a key role in our SP Funds team as well. As a firm, we strongly believe in providing the highest level of service to our clients. We want to ensure that our clients have a really positive experience, and our growing client service team has done a great job in making sure that this happens. Yasmin Virji is our client service associate, and she also joined our team earlier this year. I'm sure many of you that are clients already have worked with Yasmin as well as myself. And Yasmin graduated earlier this year from UBC, and she has been a pleasure to work with as well so far. As a firm, we also do offer in an internship program, which allows candidates to learn about the financial industry and to gain a really hands-on knowledge of the different departments within our firm. Brother Omar is our newest intern, and he has had a really positive experience with us so far as well. So now that I've introduced our amazing team, I'd also like to mention that we as a firm have partnered with Fidelity Clearing Canada as our custodian. And what this means is that our clients' funds are held at one of the largest custodians in the world. This gives you peace of mind and assurance that your funds are safe and are CIPF insured in this uncertain time. As a client with our firm, you do also receive access to your account at any time through Fidelity's portal. And of course, technology plays a key part in any firm as well. And with the help of ML360, we're actually in the process of launching our first ever mobile app as well. And we're extremely excited to provide this new app to all of our clients, and you'll be able to view your account activity, account performance, and much more as well. So definitely stay tuned for that. And I would also like to just thank everybody for attending the session tonight, and I will hand it back to Salaudeen, and he will be introducing the next speaker. Thank you. Assalamu alaikum.
Thank you so much, Sabinah. It's great to see ShariaPortfolio Canada growing and developing, and of course, meeting the demands of Sharia-compliant investors in Canada. Right about now, I want to invite our next presenter. Let's welcome our Chief Compliance Officer and Portfolio Manager, Brother Irfan Chaudhry, who will talk a bit about our funds and some of the features of our funds. Brother Irfan, over to you.
Thank you very much, Brother Salaudeen. It's a pleasure to be here and give a brief introduction of our funds, which we launched this year. This had been a great year for SP funds, which is our ShariaPortfolio Canada's associate. And we launched some basic components of asset allocation for our ShariaPortfolio management teams, and a passive tools for anyone who wants to use those tools. So just to set a frame for that, wanted to give you guys a brief background in the asset class performance in this year of plague. This year, 2020, is plagued by not only COVID-19, but also the China trade war. It was year of presidential election as well. And it was a topsy-turvy market. US equities generally, like if you guys have been in the market, you would be familiar that US equities at one point were down around 36% in the mid of March and April. So the markets recovered from there, but there are some other components like real estate, that's especially the commercial real estate, which was hit very badly in 2020. US debt has done very well because there was this year, 2020, it's done around 4.5%, slightly higher actually. These numbers are slightly dated here in this asset class performance chart. But compared to the long-term average, it has done, absolutely, it's done very well compared to the long-term average for the US debt. IFI equities, they have been subpar, and so had been the infrastructure. Commodities, obviously, the oil price has really collapsed in this was unforeseen actually when oil price went to negative price in the end of March. So that's having said that, like I wanted to kind of shift to gears towards the products we launched this year. Our first product objective, as I mentioned earlier, was to provide a base for our asset allocation strategies and provide the tools to investors, Muslim investors in general. Sharia, the SP Funds S&P 500 is a very broad ETF with a ticker SPUS. Is an index to S&P Industry Exclusions Index. It's a diversified portfolio of 180 stocks and large cap stocks from S&P 500. Its yield's pretty high as 1.54%. It's one thing I want to emphasize here, that generally lately, if you guys in the investing field, you would have noticed a trend towards the ESG and increasing focus toward the ESG. We are expecting a major asset inflow into the ESG space in next 5 years. As Deutsche Bank report mentioned, it's somewhere around $5 trillion in next 5 years. So that's going to be very, very positive for some of these companies which hold in our portfolios. Our SPUS holds very high in ESG level. It's ranked at 7.52 by ETFDB.com, and which is 96th percentile, peer group percentile. So that's kind of like not only from the ethical perspective, but also from the performance perspective, it does provide a great boon to any investor. As year 2020 was very good for ShariaPortfolio's SP Funds ETF, SPUS ETF for in this year. We noticed a lower down capture. Down capture means like it outperformed the market when market went down, and it outperformed the market during the recovery from that trough. So essentially very positive for this investing style. And second fund which we launched this year was a fixed income fund, obviously complementing our equity fund in the asset allocation. Ticker is SPSK. It's the only global the Sukuk fund which is in existence right now. It has been declared, as Brother Naushad mentioned, it has been awarded a fund of the most enterprising fund of the year for 2019. It's very diversified portfolio of 74 Sukuks, which is an average coupon of 3.5, yielding around 2.84. Its credit quality of its components are very high. And again, it showed its resilience during this crisis of March, when markets were really melting down. Maximum drawdown for SPSK was around 5%. And this year, 2020, was beset by the credit spread expansion, is emerging, especially the emerging market government's credit spread. Really, the credit spread is like the government's credit quality that's considered has gone down, and their value of their sovereign debt also decreases. So that's, in simple words, that's the meaning of credit spread expansion. QE and the U.S. Treasury purchases by the U.S. government as a result of to counteract the crash in the markets and the crash in the economy, which benefited treasuries but did not benefit SPSK directly. Still, SPSK has done almost like that was our target, around 4.5% for this year, and it's with a yield of 2.8% and capital gains of 1.52%. So these are these two funds we looked at, and we thought, we anticipated the demand. They have grown into AUMs. They are now considered kind of like very well established in the stable funds. One is around 38 million and 32 million for SPSK. What's the outlook for 2021? I think still we feel that this investing style, which SPUS represents, the Sharia investing style, ethical investing, that's going to be do very well in 2021 as well. There can be some arguments that is it a pickers market, stock pickers market, or is it a secular bull market? Rotation, would it be growth which would benefit the holders or value? Would there be a rotation from growth to value? Still, I think there is a premium for the growth, and I think SPUS has a strong exposure to the technology. Some of those themes which we think as IoT, 5G, electric vehicles, but Brother Nadeem will be speaking at length about those themes. But in a nutshell, I would say like SPUS is positioned very well for 2021 to, if the performance-wise, to replicate the performance of 2020. SPSK is again on the fixed income front. The interest rates are almost near zero right now. So holding the treasuries, I'm comparing SPSK to US treasuries. The US treasuries are kind of like the benchmark for fixed income class. So they are exposed to, whether the Fed has said that they are not going to raise the rates early, and rates are going to stay lower for a longer period of time. They are going to really tolerate inflation, which is higher than their neutral rate. But still, despite that, I think SPSK would be outperforming the treasuries in this year, 2021, because there's very low upside for the treasuries, even if the interest rate do not rise. Although we have seen uptick in the 10 years rate lately, which has almost gone up 20 bips from the bottom. And when the rates go up, basically 10 years rate essentially means that the rate on the 10 years treasuries, that means the price has gone down. And so for SPSK has a lower sensitivity to the interest rate. So that's one thing. Also, SPSK, the Sukuks, they would benefit from decrease in the spreads as well, emerging market spreads as well. And SPSK right now, yield to maturity, which I was calculating the other day and comparing it to the treasuries, it is actually, it enjoys the best yield to maturity, which is around 5% in the similar duration, 7 years average duration. Last but not the least, actually, SPRE, which is our real estate fund, a REIT ETF, which inshallah, we're going to launch end of this year. That's kind of like, it's a great opportunity, COVID-related opportunity, I call it, because the REITs generally as an asset class, they really benefit from a lower base. And the REIT as an asset class went down around 21% in the year 2020. that's really a very opportunistic, base where you can really gain a lot in the year 2021. Even if like 2021 is a moderate GDP growth of the middle single digits, 7-8%, maybe 6%, 7% as per IMF, low rates, interest rates, liquidity, all of that may be beneficial to commercial real estate sector in the US. Also, some other factors which we have noticed is that there are trends like shift from debt to equity. A lot of REITs are trading below their net asset values, so which is very, very opportune time to pick up those REITs if you want to make a bank on the lower base level. The disaggregation between sectors may be there, but I think it's a great time to really look at SVRE as a not only a third component of our asset management, but also a forward-looking kind of like an opportunistic bet in the investment as well. Thank you very much, guys. And Salaudeen, back to you.
Thank you very much, Brother Irfan. Much appreciation for you, as always, for your hard work and what you do every day to ensure that these Sharia-compliant funds are available to Canadian investors. Great work, and you're a pillar in our company. We really appreciate that. Glad to see so many of you with us on this webinar tonight. Our next presenter, of course, will focus on performance in this crazy year 2020 and some thoughts on 2021 and beyond. It was crazy, but I think ShariaPortfolio Canada made significant strides. So maybe there's some correlation there. We'll hear from Nadeem about that. Nadeem, many of you know of him, I believe. You interact with him quite often, and many of you might have spoken to him in working with you to open your account and building your strategy. So let's get right into it, Nadeem. Again, the mic is yours, and I'm glad to see you, and I'm sure all your clients and all your Canadian clients would, happy to see you here tonight.
Yeah, thank you. Bismillah. Assalamu alaikum, everyone, and thanks for joining us.
Nadeem, you'll have to share your screen, your slide.
Sure, one second here. Oops. Sorry. All right, do you guys see that? Everyone?
Yep, okay. Yep, it's good.
All right. Again, thanks everyone for joining us tonight. For those of you who are new to the company, we might have some non-clients here. My name is Nadeem Mian. I am the portfolio manager based out of the Toronto office. My role is to do a lot of the financial advising and at the same time overlook and manage the model portfolios that we have. So what I'm going to be speaking about tonight is going to be about the actively managed portfolios, the access service primarily. And, before I begin my presentation, I believe we do have a poll that we're going to show out to the attendees, right? Okay, so, if this is just a poll that we're going to probably share the results of this poll at the end. And it's always an interesting poll just to kind of get the sentiment and thoughts of our attendees and what they're thinking about for 2021. Our goal as portfolio managers really is to, take the emotions out of investing and focus in on facts and figures for us to make a better decision going forward. And, 2020, it's our inaugural year. And what a year it's been. And, I've seen a lot of managing money through media, if that's a term I can use, happening here. It's been one of those years where it's been quite unprecedented. So again, taking the emotions out, I think is very key as portfolio managers. And inshallah, what I'm going to do in my presentation is show you that. So I'm going to kind of use a timeline view of what's kind of happened. So kind of jumping into, a second here. Okay, this is obviously our standard disclaimer here. We obviously ask you to do your, any opinions and recommendations or whatever views that we have. We always encourage you to do your own due diligence and or speak to your investment professional. So 2020, I've been doing this for 20 years plus, and I can say that this did feel like a science fiction movie. I've seen the tech bubble, I've seen 9/11, I've seen the credit crisis. This was quite unique. It impacted us not just on an economic level, but on a social level. This was a pandemic. We had unfortunately lives lost in this, over 1 million. And it transpired obviously into financial markets and the economy, where we saw a shutdown. This was a policy choice. In other words, economic textbooks don't teach you this. Normally we learn about recessions and inflation and booms and busts, but no textbook talks about a manual policy decision to shut the economy down. So in a sense, we were in uncharted territories. All sorts of crazy numbers. Economic numbers really kind of had to go back to the economic depression of the dirty 30s. So, again, unprecedented times. It wasn't just what happened, but even the reaction. For example, the U.S. Fed doing what it did, it really kind of rewrote the playbook. By not just spending like $5 trillion in stimulus, but also the timing of how they did it and when they did it was also quite substantial. So again, the year it was quite an interesting year. This is just a snapshot of some of just to get a report card as far as what happened. You can see that overall, we had that big drop in March and April. The velocity of the drop was unprecedented, but as you can see, we are back above water. The S&P 500 is now up over about 12% year to date. The TSX, on the other hand, has underperformed and is just about breaking even right now. And of course, the Canadian dollar, or the US Canadian dollar trade, it's back to where it started pretty much, where it had that weakness during the lockdown period, but inevitably we've seen some money kind of come back into the Canadian dollar, and so again, just a snapshot of where we stand right now. So first, looking back, and what I wanted to do with this was that we've done a series of webinars throughout the course of the year. For those of you who maybe didn't get a chance to attend our previous webinar, this was a presentation that I gave back in June of 2020. And so it is a snapshot of what we were saying at that time, what we were doing, right? So, okay, so what was our investment outlook, right? So we're really revisiting what we were saying. And so first thing first is that at that time, we pretty much said that markets bottom before the data bottoms. So again, markets looking forward, it's not focused on the present data. And, case in point was, well, first off, one of the calls that we made was that we did think that, we were probably at the apex of the curve. Now, getting off on the wrong note, we probably got that wrong in the sense that, yes, we are starting to see the number of cases, starting to break highs, especially in the US. However, from an economic point of view, we haven't gotten that massive lockdown. We feel that the economies and even society at large has been able to somewhat maneuver COVID and kind of work around COVID, so to speak. So although from a medical standpoint, we're probably, we got this call wrong. From an economic standpoint, I think, we have kind of navigated the COVID apex, and we might still kind of be off it, but we'll kind of mark that as a wrong prediction. At that time, we pretty much said that markets can go higher during multiple quarters of negative GDP. That's exactly what happened. We kept on seeing, numbers, whether you're in Canada, US, or globally. GDP was down significantly, but markets continued to trend higher. US jobless claim peaked at on April the 9th. Markets bottomed on March 24th. That's the same story in Canada. What this simply means is that we just felt that the bleeding, like today, still millions of people are still unemployed. But what we made at that time, the call that we made at that time was that we just felt that the bleeding was going to stop. And so at some point, again, we got that right. And it's kind of like a patient. You need the bleeding to stop before recovery can actually really happen. Government and central bank actions have been swift and unprecedented. Depression unlikely. So far, again, if we were to take a look at the snapshot right now, we've got that right. There were calls of a depression back then. We felt that wasn't the case. So a check mark for that. At that time, we also said that we weren't going to test the March lows. There was a lot of, again, managing over media. There were calls that the market has to retest the March lows. That did not happen. And it was kind of all systems go at that point. Of course, fundamental changes in the economy, disconnect between economy and stock market. There's always this argument that how is the stock market doing so well, but the economy is suffering. That's a debate that still will continue, but I think still is yet to be determined, so to speak. We forecasted, we predict, and we still continue to predict a recovery in the first half of 2021. Again, we're not in 2021 as of yet, so it's yet to be determined on that one. And we were more bullish on the US versus Canada. And as my previous slide showed, the S&P 500 severely outperformed the TSX. So again, we got that right. So those are the calls we made. What was the plan of action? What were we saying to do? So at that time, the position that we took was that we were going to go into areas of the market where we felt were poised to really do well in a COVID environment and a post-COVID environment. So mainly what we're talking about, we were heavily weighted on growth secular names and growth secular sectors. So what that means is we went to, cloud stocks, video, e-commerce, online retailers. So just to kind of give you a summary of what that meant, we went with the work from home theme, obviously, and we just felt that these sectors were already kind of in their growth stages, but ultimately with the pandemic and with the dynamic shift that happened in the economy, all of a sudden their timeline for the growth shrunk, and that really kind of catapulted their business. And so we've seen that. Healthcare, of course, top of, it's still one of the best performing sectors right now. Consumer staples, again, in uncertain times, consumer staples is a sector that typically kind of holds its own or does well. Semiconductors, 5G, artificial intelligence, these are all, especially the last two, 5G and artificial intelligence, these were all sectors that even before COVID were growth areas of the market that everyone was kind of, not everyone, but growth areas of the market that people thought that, this is where we can see the next growth. And again, the pandemic really kind of expedited their growth in our view. We've had a position in gold. We continue to think that gold can play its part in a portfolio. It can act as a hedge. It can also act during volatile times. It tends to kind of, preserve its value. And the last sector was select consumer discretionary. And I'm going to talk more about that later, but we were being very selective on the consumer discretionary names. And what a consumer discretionary sector, it's a very broad sector, but just to kind of give you an idea what that could mean, it could mean retailers, it could mean apparel companies, it can mean any kind of sector that benefits off of, call it luxury spending, so to speak, like even cars, for example, can be considered a consumer discretionary to some degree. So that's what we did. These were the ingredients as far as what we were basically doing in the portfolio. And so the results are right here, really. So we have four model portfolios. We have the standard income, the moderate, the growth, and the aggressive model. Again, depending on your investor profile, we would obviously make an appropriate recommendation to you. But ultimately, if you take a look at the performance, alhamdulillah, we've done quite well. I mean, I hate to pat myself on the back or tap, for the team to actually take credit for this, but it is what it is in the sense that, I think we got the calls right. We went into areas of the market and what where those sectors were working, and we went with the best of breed. So as a result, we were able to do quite well in the year. And I think this is probably one of the best kept secrets of the firm. So just that's the performance. I'm just going to highlight a few names as far as what resulted. Like, you take a look at this and you're like, okay, well, how did you get there? And before I jump on to the next slide, let me just kind of also talk about the strategy just very briefly. We do what's called a core satellite approach. We actually talked about this in one of our previous webinars. And what we do is we use a combination of ETFs and individual stocks, so individual stock picking. So as you can see, in this is just one of our model portfolio. This is just a growth portfolio, and I just put this out here just simply as an example to explain. The top holdings, for example, are the ETFs where we have the SPUS, the SPSK, and the GLD. Specifically, like the gold serves its purpose as a allocation to gold. The Sukuk obviously does what it does for its fixed component, and of course the SPUS gives us that broad access, that broad access to the market, in one shot with the SPUS, and of course it's a diversified holding. And then where we kind of get the active management, where our goal is obviously to outperform, it is really from these areas. But although SPUS also has actually outperformed the S&P 500 on its own. So now on to kind of detailing the performance, just highlighting a few names. I obviously picking the Canadian company first, Canada Goose Holdings. This is a consumer discretionary name. We felt that this was a company that really fell on hard times even before COVID, because it's a company that has about a third of its business in Asia, and like a trifecta of bad news really hit the company. You had the Hong Kong protest, followed by a US-China trade war, followed by the pandemic, which hit China first. So, the three bad news kind of snowballed into the stock really kind of doing what it did back in March and April. But we felt that this is a stock that will benefit once the economy and life kind of gets back to normal. And especially, with the fact that a third of the business is coming from Asia. And we think that, there's obviously strong growth prospects in Asia for this company. Asia is going to be, or at least as it's looking today, the first economy to kind of open up. And so the stock has done well. It's been one of our best performers. Qualcomm is the other one. This is our semiconductor / 5G holding. In our view, this is probably the best position for the 5G revolution that's taking hold right now. They had some legal issues that's behind them. There were some disputes with some other companies, but they're beyond that. They're not just involved in 5G, they're also involved in automotive and Internet of Things, Internet of Things is another area of the market that we think is poised for growth. And this is a company that if you have an iPhone, or if you have even a Huawei phone, which is actually the largest cell phone maker in the world, Qualcomm has license agreements with these companies, and so you're finding their chips in those companies. And again, with the 5G revolution, this is in our view the best position it's the best positioned semiconductor out there. A couple of other names, Zoom Video. I had to mention it because we are on Zoom. And actually, Zoom was the best performing stock in our portfolio. Disclosure though, we have recently sold out of the position, but I felt that it was still worth mentioning. Let's just keep this simple here. December 2019, they were doing about 10 million meetings per day. They went from 10 million meetings to 300 million meetings by April 2020. That's phenomenal growth. That's growth that you don't see in any business, really. So we felt that, this was a situation where a company is growing at a phenomenal rate. The market was behind it in terms of valuing it. And so we were, for the most part, we were not at the bottom, but we definitely participated on most of the write-up for this company. Again, going with the work from home theme. The last stock that I'll quickly mention is Tesla, because it just seems to be the favorite stock of everyone to mention, because it's always in the headline. But we are a believer in the electronic vehicle growth. We think that that's a story that's going to start to take fold in the next 5, 10, 15 years plus. It's an interesting company, obviously, in the sense that Tesla, what is it? Is it a car company? Is it consumer discretionary? Is it a manufacturing? Is it a technology company? And so, I think it has a lot of elements of all. We're talking about a company that auto sales, by the way, got hit pretty hard during the pandemic. So it's not just EV, it's also auto sales. This is a company that we think is a premier company in the EV vehicle. We're a believer in that sector. And of course, they recently did get added into the S&P 500, which I think is another reason, which is a reason why maybe we've seen this stock kind of, outperform here in the last couple of weeks. So that's just, again, that's a kind of a backward look, or just a quick, view in the rear view mirror as far as what our view was. What did we do? What's our report card right now, and where we sit? Now, what are we saying today? And then I'm going to talk about the present, and then I'm going to dive into the future here, of course. So 10 reasons, when I say today, I'm talking about, the next maybe 30 days here. 10 reasons why we see a big year-end rally. I'm not going to go through all 10 points, but what I am going to say is, of course, COVID is top of the mind. I think without going into bell curves and cases and deaths and what those, I think the bigger picture here is that the vaccine and the therapeutics has taken the worst case scenario off the table. And that's what the market focuses on. They're not focused on today's headlines. They're focused on, is there light at the end of the tunnel? And if that's the case, then I think that's a big reason why, we could continue this rally. We've already seen the market kind of react to this. We just think that there's going to be continued momentum behind this. There's a lot of pent up demand in the US. I'm going to talk about that. China is booming. Of course, I have to mention the US election, because boring Biden is in and tumultuous Trump is out. And markets like predictability. They don't like unpredictability. And one of the things with Donald Trump was that he was a little bit unpredictable in his approach. And that's not something that the market likes. I think having a more predictable person. And the one thing that I'll just say about presidents and stock markets is this: U.S. presidents don't make stock markets. It's markets actually make the stock president. And I think I'll leave it with that, because the empirical evidence tells us that, funny enough, Democratic presidents have actually, the stock market has actually outperformed with Democratic presidents in the White House versus Republican. So there's a ton of cash on the sideline, and earnings are good. And we're at this time of the year. Santa Claus rally just simply means that seasonably, December historically has been a good time of the year for the market. So history is kind of on our side. So first, I'm, again, not speaking to all the 10 points. I'm just going to highlight, a few of them. Later on in the Q&A, if you see any of these bullet points that you want to have a question on, I'll be more than happy to answer. But first, of course, jumping to COVID, maybe I'm going to sound like a broken record, but like I said, market is focused on the future, not the present day headlines. Now, maybe I'm trying to look at the glass half full, but the bright side here is this: we have seen unprecedented developments in the medical and technological front on this vaccine. It's something that we can't just overlook. So that's number one, of course, right? From a shorter term perspective, right? What we've seen recently, I know this chart really looks ugly and scary, but what I will say here is this little dip here is just simply means that the rate of growth is starting to slow down. And yes, I'm talking about the US more than I am talking about Canada or maybe the rest of the world, because the fact of the matter is the US has been the dumbest kid in the class when it comes to COVID. No offense to any Americans here, but you know, we have to kind of focus on this. And of course, they're the largest economy in the world, right? So if we're starting to see the rate of growth of COVID start to slow down, we have the vaccines kind of on the horizon. We have to not focus on today. We have to look ahead. And the last thing I'll just say is the change of government. Of course, I mean, you know, we got an administration right now that's going to obviously come into power in just over a month. That looks like, you know, they're going to take this thing a little bit more seriously than the previous administration, right? Well, so those are just my comments on COVID. The output gap. This is just a look at the GDP. And really what it's telling us is that it's a comparison of the real GDP versus the potential GDP. You know, this fall off here, drop in, it's as a result of weak demand. Just think of it like this. When the pandemic hit, you weren't flying anymore, you weren't going to the restaurants, spending just got cut. And so what ends up happening here is once your spending gets cut, your GDP goes down. Potential GDP is the capacity at what the economy can actually function at. And you can see that there's a gap. So, you know, consider this as, you know, there's a lot of potential for the GDP to pick up as demand starts to pick up. Buying power, this is one of my favorite slides, and I'll tell you why. There's about 4.3 trillion in cash. And what I mean by cash is institutionals and even retail investors have money parked in retail money market funds. And, you know, from a very small level, my point of view, when I speak to a lot of people and you'll be surprised. A lot of people are just scared and leaving their money in cash, scared to get into the market. We're not financial. I'm not expecting anybody to be a financial guru on this, but what I'm trying to explain with this here is this. We can all go back to 2009 and realize that, you know what, the market was really scary at that time. What ended up happening was institutions and even retail investors, they started to raise cash. And so everyone got scared of the market, you know, money was coming out of equity, it was going into cash. Subsequently, what ended up happening was as the money got put to work, guess what? Stock market obviously took off. And likewise, fast forward today, we've seen a similar situation. When the pandemic hit, there was an outflow of money leaving equities into cash. We're still at really high levels. This is dry powder. This is kerosene to the fire if at some point this money has to be put to work. Otherwise, it's just going to be sitting in cash and it's not going to be yielding anything. So at some point, like I said, this is a bullish indicator. This could be what we think ammunition for money to come back into equities. Okay. Corporate earnings are beating expectation. You know, when we're looking at stocks, the main thing here is every stock is valued on their earnings. And the earnings picture right now, this chart basically is telling us a couple of things. The Wall Street community, the analysts out there, the market, they all have an expectation on what companies will make in terms of sales and in terms of earnings. What this is telling us is that when companies are reporting, they're actually beating those expectations, both on the top line, meaning the sales, and on the bottom line, meaning earnings. So a couple of things here. Number one, this is telling us either A, companies are doing better than what they were expected to do, and B, the market, the Wall Street or the analysts out there, they're underestimating it. And so there's a disconnect here. And so, you know, the earnings picture we think is on the up and up. We're going through a trough period in earnings, but I think there's going to be a profit recovery. So that's the snapshot today. Now we're going to go into the future here, and this is where I'm probably going to get a little bit excited. So hang on to your seats. Okay, so first off, we don't condone smoking. We're ethically and socially in good governance. We're all about that. But the meme says it all. First rule of 2021: never talk about 2020. And you know, for the upcoming year, short term, we are bullish. I think I pointed out that those 10 reasons why. And you know, into 2021, we think there's a profit recovery. We think companies are going to because the last few quarters, like I said, we've seen that big drop off. So we think the bleeding stopped. We think the recovery is happening. There's a lot of other stimulus. You know, I've talked about the Fed doing the $5 trillion stimulus. You know, there's a fiscal stimulus also on the table, and it's not just the U.S. I mean, you know, governments around the world are doing that. So this is all, again, liquidity that's coming into the market. You know, programs that are really kind of there to help the economy. What we are going to be doing, and what we are doing right now for 2021, is we are going to be taking more of a barbell approach. And what that means is, you know, as I explained, we went with a lot of growth secular names for 2020. We're not necessarily getting out of those names, but what we are doing is we are going to be looking at other value and cyclical sectors. And what that means is that these are sectors that and stocks that probably will start to kind of outperform once we get more of an opening up of the economy, right? And just to kind of give you a quick example, maybe something like travel, right, which is a cyclical sector. You know, again, not to nitpick, but just to kind of, for the sake of explanation, what does that mean? That's what it means. And of course, there's always going to be bad news. I've been doing this 20 years, and I'll tell you right now, I don't think there's, you know, I've never come across a day where there hasn't been a negative news or there hasn't been a reason, you know, to be bearish, right? So our eyes are focused on the bigger picture. We remain bullish. We think that yes, we're going to have short-term dips, but those dips might actually present an opportunity. Now, again, taking a longer look. And I put this chart up here, and this is a great chart because what this is doing is this is talking about secular bull markets. Secular bull markets are basically periods of the market where you have this uptrend that's going on. And so this goes back, you know, since 1929, right? And the exercise of this really is just to, you know, give people some idea of perception that, you know, history, I'm not saying history will dictate the future, but you know what? If you don't learn from history, you're doomed to repeat it as well, right? We've all heard that saying. And, you know, the returns in the bull secular markets is what I'm trying to explain here. So for example, right, from 1932 to 1966, we've seen, you know, the S&P 500 was up 300%. Same thing happened from 74 to 2000. Now, if we were to take a look at present day time here, and these cycles have lasted anywhere from 34 years to about 25 years or 17 years. If we look at 2009, kind of like the event, you know, the period here where we've seen bear markets, the gray shaded area here, these are secular bear markets where the markets have done really nothing. And my next few, I have slides later on that I'm going to dive more into that. But what this is telling us here is this: if we were to just use history and just apply the same numbers that we saw, the 2300 on, say, the 2009 low, we would probably, you know, get the S&P by 2034 close to about 13.5 or 1400. Again, just using math. We're not predicting that those are our targets or anything, but just looking at history, looking at the years, and just doing basic math, we can see that, you know what, there is a possibility that we could still happen here, that can happen. So before I get into that, the thing here is this now. Can it happen? Will it happen? Or what will make it happen? That's the main thing. So this is probably what I'm really excited about, because I think one of the reasons why I think we're just in the early innings or maybe in the middle of a bull secular market is that there is this great wealth distribution that's going to be taking place. It's the millennial shift. You know, we all make fun of millennials, myself included, and maybe there's some millennials on this call. I don't mean to offend anybody, but you know what? We're hoping, we're banking on you guys now, because what's happening here is the demographics right now are in play for this market to go higher and for a long period of time. By 2030, millennials, right now, by 2030, millennials would have inherited about $68 trillion. And what that means is right now, that's about 68% of the U.S. net worth right now. And here's the beauty of this. Right now, they are actually the largest group of people. And, you know, you can see by this chart, they actually have the smallest wealth. So what I'm basically trying to say here is this: if I were to explain this to my children, is that this red, this blue, this wealth here held on to by these generation, most of it is going to get shifted over here. And so what's happening here is you have the average age of millennials being only 20, is about 26 and a half years old. There's over 2.5 billion globally. We're not just talking about the US, but that's a huge number. So 26 and a half year is the average year. Now just think about this for a second. Let's just say you're 26 or 30 years old, take yourself back in time. You're entering into your prime leverage years. You're entering into your prime spending years, and your prime income earning years. And consumption is the number one driver of GDP. So I'm going to talk about more about this, but this is a major theme that is going to take hold, for the next few years. And the beauty with demographics and stats like this is that, age, demographics, it's going to happen. You're going to get older. This wealth is going to shift because, as sad as it may seem, there's people are going to die, and that wealth is going to shift over to the next generation, right? So let's look back at history. What did happen, right? So this chart here is from the Brookings Institute, and what this basically is telling you is the ratio of middle young over young ratio. So those people that are aged from 35 to 49, again, that the prime years, those prime spending income earning years. And if you go back from 1945, you can see that group was on an uptick. Once it reached, and you know what? So in other words, that age group was starting to grow. Guess what the market was doing from 1945 to basically its peak in 1963 or so, 65, sorry. This was the run that the S&P 500 had during that cycle. Now, I'm going to leave the left chart there. I'm just going to, focus on now this drop here. Now what we're starting to see is the prime year, the 35 to 49-year-olds, they're shrinking now relative to the population. And guess what happened to the market? This was a bull secular market. This was the period from 1966 to 1981. Now, of course, there are other things that are going on in the world. I'm not saying that we discount those or don't pay attention to them, right? But this is a huge driver, right? Fast forward again. Now we're starting to see that age group, the number of those people start to increase again. Market takes off from 1981 to 2000. And at the peak of those years is when the market actually starts to drop. Because we all know what happened in 2000. I think everybody on this call, either has been through it or has at least read it, because the next slide will show you that from 2000 to basically right here, maybe around 2015 or 14, you can see that the S&P basically went sideways, right? This chart actually ends at 2014. Again, this was a bear secular market for a good 14 years or 13 years. The market really didn't do a whole lot. Now, according to the U.S. Census Bureau, we're starting to see a trough in that, and we're starting to see that age group start to pick up. And as I showed you in my previous slide, we're starting to see that the millennial number is going to start to increase. And that's where we are right now. I mean, if you were to take a look at the market cycle right now, the trough was here for the millennials. We're starting to see that pick up. It might hit its peak, around 2035 or so. But, right now, so far from 2014 to 2020, we've seen, the market obviously do well. So really just kind of keeping it simple here is this. Prime income spending years, the market's not going higher because the Fed is printing money. Not necessarily. I mean, I'm not going to say that it means nothing, but the market is going higher because people are earning more, they're spending more. And when you spend more, corporations, they make more money. And that's the main theme that, the driver of this market. So, to kind of conclude here, our portfolio strategy, just to recap, short term, we are bullish on the market. We think the pullbacks will be buying dips. We are going with the barbell approach. where we are going to be shifting into some cyclical, life back to normal trade, as I call it. Longer term, as I explained, the demographic cycle, it's in play, and we think it can carry out till mid 2030. And the last thing I'll say here is this: everyone, most of you guys here on this call are clients. Some of you might not be, and we obviously welcome everybody. And you have a number of options to go through when it comes to investing. You can go to our competitors. You can do it yourself. Our role here at ShariaPortfolio is obviously to do it in a Sharia compliant way, but as from the Access side of view, we're out here to outperform. And we think this is the value that we add. The one thing that we say of active management making a comeback here is this, and I'll end with an example. Passive funds have done well, and we're not getting away from passive funds, but an example here is this: Tesla. I told you I'd come back to Tesla. The reason why I'm coming back to Tesla is this: Tesla is being added into the S&P 500 on December the 21st. It's trading near an all-time high. If you were in a passive fund, right? In other words, the largest passive fund out there is the S&P 500, the spiders, right? It tracks the S&P 500, and that is actually the largest ETF or index, benchmark out there. Guess what? That fund never bought Tesla, and it's going to buy it on December 21st. So going back to our outperformance argument, right? And Tesla's very unique because it's going to be put into the top, into the S&P 500. And I believe it's going to be a top 10 or top 15 holding. So, if you were in a passive fund, you didn't take advantage of that Tesla opportunity. It wasn't in your fund. Likewise, companies like Zoom, which is actually a company that's larger than a lot of the S&P 500 companies in there. It's not in, you won't find it in the S&P 500. So here's where we think active management makes a comeback, because we think that, you need to be active in this market in order to sometimes, invest into the next leaders out there. And we think that the cycle that's upon us will present those opportunities. So with that, I'll conclude my presentation, of course. And again, thanks again for joining us on this call. And I'd love to take any questions now, inshallah.
Yes, thanks very much, Nadeem. That was awesome, and I'm quite sure those of you who are on this webinar would find that very informative. If you're a client, of course, you're probably figuring out that this is the guy who's been behind it, and that's why my account is where it is right now. Now, Nadeem, we did a poll. Were you able to get the results of the poll?
It did pop up, but I haven't had a chance to see the result.
Can you see it there?
No, I don't see it.
I'm gonna share it again.
Okay, I see that.
Maybe you can comment on it a little bit.
Oh wow, I'm actually surprised. I 53% bullish and 39% neutral. Oh, only 8% bearish. To be honest, that worries me. No, I'm just kidding.
Well, this is your first question. What's your thoughts on this?
What's my thoughts on this is, we have some smart attendees, I guess, or we have some smart clients, or maybe their experience is getting them bullish, I guess. I guess that's the only answer. Well, because what I do know here is this, speaking to a lot of people, there is still a lot of fear out there. There's a lot of bearishness out there, and that's what I'm accustomed to. So yeah, I am a little bit surprised of the poll, but it's good. I guess you could say we picked a good audience.
Great. And a follow up on that, based on what you've mentioned, and based on that poll too. And this is a question actually from an attendee. What are some of the changes to ShariaPortfolio's portfolio in 2021? What are some of the big changes we can expect?
Well, it's that barbell approach that I mentioned, where we will, start to look at different sectors. I mentioned travel as a sector. So we do think, for example, in 2020, we pretty much stayed away from that industry, and some of that actually had to do with the fact that like airlines, for example, were no longer Sharia compliant. So here's a situation where the Sharia compliancy actually saved us, in the sense that it forced us to get out of those airline stocks. So some of the changes that we are going to start looking into is looking at sectors that have been beaten up, that did not participate in that underperformed maybe in 2020, but that might now start to benefit from the opening up of the economy. So like retailing might be another, where that's a sector that's been hit hard. Travel would be I guess the other one.
Great. Well, I just want to remind all of our attendees that this webinar is being recorded and would be available, and inshallah, we'll be sending it to you once you've registered. I've got questions here also for our other panelists, and I want to bring Naushad, our CEO, in on the next question. This is from an attendee. Congrats on your launch of your 2 Sharia compliant ETFs on the New York Stock Exchange. Are these available in Canada, and how can I invest? Naushad, that's for you.
Yeah, great question. All of our ETFs, both of the existing ones and the new one that's coming out later this month, all 3 are available on the New York Stock Exchange, and you can buy them in Canada through various brokerage firms, companies like Questrade, or even the local banks. If you have a brokerage account that has access to the New York Stock Exchange, you can buy them. We actually do have a lot of people throughout Canada buying them now. And we also have quite a few other advisors outside of ShariaPortfolio Canada that are also using them for their clients.
Great. Well, since I have you, I'll throw another question at you. This is from another attendee. I live in Bahrain. I like your company. I've been following. Can I open an account even though I'm not from Canada?
That's a fantastic question, and I'm really excited to be able to say the answer is yes. We have a global portal for clients all over the world, and we do have clients in the Middle East already. If you check out sp-globalwealth.com, you'll see our global portal. You can book an appointment with anyone on our team to ask any other questions you might have, or to get assistance with opening an account, and we're more than happy to help you get started.
Excellent. And Irfan, and thanks for that, Naushad. Irfan, there's a question here for you. Where are who's our custodian for our funds?
US Bank Ops, US Bank.
Excellent, great. And I guess like clients want, clients who are on, of course, prospects would definitely want to know that we have, great custodian and behind
Actually, all of our partners in ETFs there, we have a great partners. Goldman Sachs is our market maker in our equity ETF, and Flow Traders is our market maker in the fixed income ETF, and US Bank Ops is our custodian of our assets for the funds.
Yeah, and what's the role of Fidelity as a partner with ShariaPortfolio Canada?
So they are our custodian bank, in the sense that when any client opens an account with us, Fidelity is the institution that holds the assets. Our trading is done through them. All our back office is done through Fidelity. The CIPF insurance that clients get, that's provided through Fidelity.
Great. And I think this might be a follow-up question to that also, by someone who's asking a question. Is there any way of knowing that my funds are safe at your company?
Well, I think so. First of all, we provide you online access. That online access is through Fidelity. And so in other words, you can view your account, you can see the value of it. Number one. And number two, all the investments that we buy at ShariaPortfolio Canada, these are all liquid ETFs and stocks. We're not in the business of putting you into a private fund where you're locked up for 2 years or anything like that. Ultimately, Fidelity is the custodian. They're the holder of your assets. And I don't really like to say this, but if the worst case scenario, if you guys think that somehow we're going to leave Canada and go back to the US, well, you know what? Your account is actually is being held at Fidelity. This is not a situation where, we're holders of the asset.
This might be a follow-up too for you, Nadeem. And these are great questions. Alhamdulillah, we have some pretty good attendees. They react to polls very well and they ask really great questions. Does your portfolio include Canadian stocks?
Yes. So we do have, like I mentioned, Canada Goose as one. I would say in a given portfolio, our allocation to Canadian stocks is about maybe 15%, 20%. And the reason for that is this. We're obviously Sharia compliant. And so what that does, we're trying to build a diversified portfolio, whether it's an income or it's an aggressive. And with Sharia compliance, what ends up happening is, if you take a look at the Canadian market, the TSX specifically, obviously a big chunk of the market is gone when you exclude financials. Financials are not compliant, so that's out of the market, number one. Number two, the TSX, yes, it has a technology sector, but it's not necessarily, it's not one of the largest sectors in the TSX. So, and outside of financials, the two other sectors that you're going to look at are energy and gold. And so it does leave, it does become a little bit tough to build a diversified portfolio strictly with Canadian stocks. We think that it's in the best interest of the clients to have a diversified portfolio. Of course, if there's a Canadian name that we like that can be added into the portfolio, and it's obviously for the benefit of our clients, then we will do that.
Great. And Naushad, I want to bring you back in on another question I believe maybe you can answer. How do I know that ShariaPortfolio's portfolio are Sharia compliant?
Yeah, great question. We actually, first of all, have all of the stocks that we're able to use pre-screened for us by an independent third party that is IOFI backed. IOFI is the accounting and auditing organization for Islamic financial institutions. So they validate that these stocks are Sharia compliant. So that's one step. So just the stocks we look at have already gone through a filter. The second step is that we engage auditors and advisors, Sharia auditors and advisors that are independent from our firm, that look at our products and our service offerings and review all of the contracts and review our processes to ensure and verify the Sharia compliance. So these are both very important steps, and we do have more information about those on our website. And we also have the Sharia certificates for our wealth management service, as well as for our ETF products.
Yeah. And could you advise Naushad on where ShariaPortfolio is licensed in Canada? Is it throughout Canada, or is it certain provinces?
We've started off with Ontario, Alberta, and British Columbia. So at the moment, we're focusing on those three provinces, and our intention is to, inshallah, be in all of the provinces within Canada. Excellent.
I think, Nadeem, this one might be for you. My earning is in Canadian dollars, and investing in a US stock means we would lose around 30% on exchange rate. Mm-hmm. That was the question.
Yeah, no, that's a good question. And I get that a lot. So here's the thing. Let's just say, for example, let's just say let's use a traditional Canadian investment account, and we take the Sharia aspect out of it. You walk into, a big bank, and they sell you, for example, their diversified portfolio. Okay. That diversified portfolio is invested into all these assets, right? Guess what? There's a good chance that, maybe only 70% of your investment is actually in Canadian dollars, in Canadian investments. So what they've done is they package this fund as a global diversified portfolio, but the underlying is in US dollar. And so ultimately your investment will be mostly in US securities or something denominated in US. So I don't look at it as losing necessarily. People, we get a lot of investors who, for example, will own a global fund, okay? And it's priced in Canadian dollars and they don't see the conversion. But guess what? That conversion's already happened. So, for us, we're actually more transparent in this case. We're actually showing you that, yes, you know what? You have a diversified portfolio and here's the conversion. At the end of the day, I think, when clients view their accounts online, everything is actually consolidated back into Canadian dollars for you to view. So if you started off with 100, you can see that 100. But of course, when we're investing the money, we are going to be buying, a fair amount of investments in the US. And at the end of the day, you know what? The Canadian market, yes, there's opportunities in the Canadian market, but it's not a deep market. And that's why, our focus is not to be currency managers. We're obviously trying to focus on building growth and managing the returns.
Great. And I think I have another one here for Naushad. Exciting news regarding the REIT. Congratulations. Given the recent work from home trend and an anticipation that more of a hybrid model will be employed by companies for their employees, do you see the demand for housing and office space in downtown area of large metros such as Toronto decreasing and demand for housing in the outskirts increasing? If so, has the REIT composition taken that into account?
That's a great question. And when it comes to real estate, right now is a very unique situation. We have a private real estate fund that we've been managing in the US for some time as well. And one of the things that we have recently done is focus primarily on residential versus commercial. We're concerned about office space and if there is ever going to be a return to the old normal. Our staff, everyone now, for the most part, works from home. This is something we didn't do in the past. We have about 30 employees. Everybody's working from home. We've got a beautiful office here, but it's empty a lot of the time. And many businesses are in that situation. When the day before New York was shut down, I was actually in Manhattan and I was invited to Ernst & Young's corporate headquarters in Times Square. And one of the most amazing things was that the building was pretty much empty. 90% of the employees are working from home and are indefinitely going to be working from home. So we do have concern about major metropolitan areas and office space in particular. So our focus is more so on residential. Now, in terms of the REIT, we are investing in a basket of Sharia-compliant REITs within our REIT, which are going to be global, worldwide. So, most of those properties that are in the REIT are going to be similar, being focused a lot on residential. There are some commercial properties like storage space, storage companies and things like that. But our focus is more so on residential, given how things are panning out. It is possible that commercial may come back around in the future, and if so, we'll focus a little bit more on that. But for the time being, our focus is on residential, and yes, we are very interested in areas outside of major metropolitan centers.
Just to add to the question there, the REIT ETF we are building, we have worked for almost 6 months to structure a product which we think is going to be very balanced and diversified. And there is and as I allude to, there is a REIT as an asset class has a downdraft of 21% in 2020, and that provides a very good baseline actually. And the likelihood of that outperforming that, is it's a 10 years return on average is around 8%. And whenever there is such a low base, their odds of its outperforming that average, 10 years average, is very high. As far as your question in regards to the composition of the ETF itself, it's a diversified portfolio. It has a small component which is in the office space. It has a significant component in the industrial and warehouse properties. It has also some other REITs like tower REITs and the research and development REITs as well.
Great, great. And well, we've got a few more minutes and we've got quite a lot of questions. I'll take a few more. And Nadeem, this one is for you. It's year end. What can I do to optimize my contributions and get some tax benefits?
Sure. I mean, a couple of things. Of course, you can start with the TFSA, where annually the limit is 6,000. I mean, it's a great vehicle, I think, to for really any investor out there to take advantage of. If you don't know what that is, it's a tax-free savings account. You're allowed to put annually $6,000 into an account that can actually grow tax-free. And if you haven't done so, your amount is actually accumulated. So you could probably go to your last tax filing or even call CRA yourself and figure out what that number is, for yourself. So that's number one. The other, for any parents out there with children, the calendar year always kind of presents the RESP, topic where you can actually, have an account for it's called a registered education savings plan, where you would set up accounts for your children for their post-secondary education. The government, the government basically gives about 20%, up to about $500, so 20%, of the contribution. So in other words, if you put 2,500, which is the maximum you can put in any given year, the government will grant you another 20% on that. So these are all kind of calendar year things that you might want to mark down on your calendar to kind of do before December 31st. Because what ends up happening is, especially the RESP, when you miss that calendar year, you kind of have to play catch up. And with the RRSP, typically, I know a lot of people kind of save it till the last minute on March 1st or February, or the end of February, whenever the deadline is. But you can get started right now too, by making that contribution this year for your previous tax year. So those are kind of obviously the main things. As far as there's anything else, tax loss selling, sure, in your non-registered accounts, if, towards the end of the year, if you are, sitting on a huge capital gain, you could take a look at some tax loss selling, and so, yeah, those are just some of the calendar items that you should kind of keep top of mind as the year ends.
Excellent. And of course, Nadeem and the team of financial advisors at ShariaPortfolio Canada are always available. The numbers is our number is of course listed on the screen, 604-260-7150. And of course, you can email us at canada@shariaportfolio.ca. Is that time of the year, and I know in the industry there's tons and tons of questions. Feel free to call us, feel free to email us. So you can take advantage of what's available at this time of the year. And I think it's probably program time now. I'm going to ask Naushad to come in and kind of give us the last word on what to expect in 2021 from ShariaPortfolio. You've completed a year here in Canada. We have completed a year here in Canada. And it's been a fantastic ride, even though the year was very, very troublesome, sci-fi to some extent, as Nadeem mentioned. But it seems that ShariaPortfolio has really taken off in Canada, mostly because it's registered and it's licensed and it's grown to 3 provinces. And so on. So, what are some of the things that we can expect in 2021? And of course, from a client's perspective, where is ShariaPortfolio going in 2021?
There's a few things that we're very, very excited about with 2021. First and foremost, we want to expand to all of the provinces in Canada. And I think that's going to continue to happen throughout the year. So if you are in places like Quebec or Manitoba or Prince Edward Island and you're interested in our services, contact us. We want to be able to serve you regardless of where you are in Canada. Second thing we're very excited about is our international expansion. Our Canadian company is our launching point to serve clients all over the world. And we're already working with clients throughout the Middle East, Europe, parts of Africa, and the growth potential is incredible. Our market is effectively 1.8 billion people in the world who identify as Muslim. If you stop and think about that, it's incredibly exciting that 24% of the planet are people who would be interested in our services. So we have very good reason to be really excited. And one of the other things to add to that, especially in relation to some of the questions about US dollar accounts or mixing Canadian and US stocks, one of the unique things about our firm is that, first of all, we're the only licensed portfolio managers in Canada that are dedicated to Sharia compliant investing. So we don't have any competition. What that means is, as portfolio managers, we can customize your portfolios for your given situation. If you're someone who really doesn't want US stocks or just wants to focus on Canadian stocks, we can build out a portfolio for you and help you work towards a solution that meets with your risk profile, your objectives, and your preferences. So that's something that that we're very proud to be able to do, and that's one of the things that really helped propel our firm in the U.S. as well. The fact that we can customize our solutions for every client. The other thing we're very excited about in 2021 is additional funds. So as we mentioned here in this webinar, we've got our global REIT being launched soon, and we're very excited about having these 3 funds available in Canada and the rest of the world. And we're looking forward to adding even more funds to our family of SP funds. So I will end it with that. And I'd like to thank everyone again for taking the time to spend the evening with us. I know we went through a lot of material today. Some of it may have been a little bit technical, but we encourage you to contact us. There's no cost to have an initial consultation. We're more than happy to speak with you, answer your questions. And even if you're someone who decides you want to invest on your own, that's fine. Our mission is to make Sharia compliant investing available to everybody so that when you are investing in the markets, you don't have to compromise your personal principles. So even if you want to do it on your own, we're still happy to speak with you and help you in any way we can.
Well, with that, thank you very much, Naushad, and thank you all attendees on this webinar, and of course our panelists for presenting this evening. Thank you very much, and contact us should you need any help at all on your account, especially at this time of the year. And do look forward to some wonderful things happening over the next month. As we celebrate our first year in Canada, as well as launching some new products like we had mentioned to read. So with that, thank you very much, and we look forward to seeing you even more in the coming year.
Sure.
Assalamu alaikum.
Wa alaikum assalam.
Assalamu alaikum.